Hi, and welcome to the Stockscores Market Minutes for August 10th, 2015. End impulse. Short-term market gyrations make it easy to change your opinion on a stock or market very quickly. It's important that we avoid impulsive decisions driven by short-term moves in the market. We need to step back and look at the big picture to determine if a move needs to be made or if patience is better. Don't get caught up on the short-term signals that don't match your strategy. If you're trading off of a weekly chart, you shouldn't be looking at a 15-minute chart for exit signals. If you are a day trader, well, then maybe you're looking at a 2-minute chart, but don't be looking at what happened in the last 24 seconds because it doesn't really matter. All right, let's look at the charts of the market now. Here is the S&P 500 index ETF. You can see that we've fallen down to support at the bottom of a pennant pattern where it is likely the market will bounce. You can see that at the end of the day on Friday we did get a little bit of a bounce, and I expect that next week we will get a little bit of a rally toward the top of that pennant. Now, of course, if we break down through the green line, well, then we're going to head down towards the support from early July there, July 8th or so. Longer term, we still remain locked in that sideways trading pattern. The lousy thing for traders is sideways trading patterns because there's just no action to trade, and you can see volume very low. We're just stuck in that range, and that's building a good base for a potential break to the upside through the red line, but it also means we could threaten that long-term upward trend line, the green line, and if we break through one of those lines, that's going to tell us what to do in the months ahead. Here's the Russell 2000, and we've been pulling back there for the last 5 or 6 weeks, now at support where it should hold, but we need to see some confirmation of that. I do think that the small caps will hold because I do see some rotation underway out of the large caps and into small, but I think it's still too early to call that. Here is the TSX 60 ETF. You can see in the last few days it sold off. Of course, Monday was a holiday in Canada, so the market's only had a 4-day trading week for the Canadian market. And a little oversold, probably bounces back short term, really being dragged down by weakness in the energy sector. There will be a bounce in energy stocks. They are getting pretty oversold, but until you see the signs of a bounce, which is a break from a rising bottom on maybe the 30-minute chart, I wouldn't try to bottom fish those stocks just yet. Here is the longer-term weekly chart going back 3 years. You can see stuck in that sideways range. More volatility than on the U.S. market, and that's because of the uncertainty surrounding commodity stocks. But relatively stable, just not very much excitement, not very much action for the buyers to take advantage of. Where we really see a strong negative opinion is in the TSX Venture, which is heavily dominated by the gold and energy names, mining names, and you can see it's dismal and getting even worse as it moves to new lows. This is a market to avoid. At least those commodity groups in this market are best avoided right now. Interesting, the TLT, which is the proxy for the U.S. 20-year Treasuries, broke its downward trend line this week. Last week I thought it would roll over and move lower. It didn't do that. It actually broke the downward trend line. And so that points to higher prices for bonds, which is lower interest rates. And I think that's interesting as the market begins to speculate about long-term interest rates going up. I think maybe we get a raise of rates, but that doesn't mean it's going to be a continuous raise of rates over time. We might get a little bump up in rates, and then the Fed might just sit there and not do anything. And the long-term outlook, the market is telling us that the long-term outlook for interest rates remains relatively low. Here's the US dollar trying to break through that red line there, which is call it a little pennant pattern that we're building. Tried and failed this week. I still think it could do it, but not a real strong signal yet that the US dollar wants to break out of this pattern that it's been in. But this is a very important chart to watch because if we do get a break to the upside, that's going to be even harder on the commodities, particularly oil. And so you want to keep a close eye on this chart. Again, it tried to break to the upside this week, kind of failed to do that. It may just stay in that pennant pattern for a little while longer. Here's the chart of gold, really an ugly chart, broke down through support 3 or 4 weeks ago and looks to me like it can continue even lower. I want to avoid gold and gold stocks right now. Oil moving to new lows. I talked about this last week, how it was pretty oversold and I thought it would bounce. It failed to do that. It tried for 1 day on Thursday and then it failed. So the sellers are still in control here. And again, there will be an opportunity to bottom fish the market, but you have to wait for some confirmation from the market. Don't try to pick the bottom, try to pick a price level just above the bottom as we break a downward trend line on an intraday chart and break higher from a rising bottom. VIX very low. That tells us that the market doesn't have a lot of fear. That's supportive for the bulls. I worry a little bit that it's a sign of complacency, but I don't think there's any real issues looming that are going to make the owners of stocks run for the exit door just yet. And certainly the VIX is supporting that. But we also see real hesitancy among the buyers. And for that reason, I've got neutral ratings for U.S. stocks, both long and short term. Canadian, neutral, long term, bearish, short term, although I do think we'll see a little bit of a bounce this week in the Canadian market. Gold, bearish on both time frames. Oil, bearish on both time frames. Short term market strength starting to lose momentum. We've talked about that. Pullbacks are likely to continue, and we should see the bond market continue higher. Please ignore my comments there. I forgot to update them. So basically, I think that oil still ugly but oversold. Gold, ugly, likely to continue lower. U.S. stocks stuck in that sideways range. Canadian stocks stuck in that sideways range. Short term should see a little bit of a bounce higher. That is the Stockscores market minutes for August 10th, 2015. Have a great week in the market and trade well.